Welcome to today's video. A summary of the classic investment text, Security Analysis, by Benjamin Graham and David Dodd. In this video, we'll provide a summary of the key principles of security analysis. Whether you're a beginner or an experienced investor, this video has something for everyone. We'll cover topics such as balance sheets, income statements, cash flows, margin of safety, earnings analysis, dividend policy, capital structure, valuation, securities with special characteristics, and market fluctuations. By the end of this video, you'll have a solid understanding of the key concepts and tools of security analysis and how to use them to make informed investment decisions. So sit back, relax, and let's dive into security analysis. Today's sponsor is Audible. With Audible, you can listen to this book and thousands of others on the go, at your own pace, and with the added convenience of narration. Plus, as a member of Audible, you'll have access to exclusive sales, discounts, and a free book every month. So don't miss out. Get Security Analysis on Audible now and start listening today. Check the link in the description for more details. Right. Let's get on with the video. Introduction to Security Analysis. In this chapter, Graham and Dodd introduce the concept of security analysis, which involves evaluating the investment potential of a company's securities. They discuss the importance of understanding the financial statements of a company and how to analyze them in order to make informed investment decisions. The authors also discuss the role of security analysts and the various factors that can influence the value of a company's securities. The balance sheet. The balance sheet is a financial statement that provides a snapshot of a company's financial position at a particular point in time. In this chapter, Graham and Dodd discuss the various components of the balance sheet and how to analyze them in order to understand a company's financial strength and stability. They also discuss the concept of liquidity, which refers to a company's ability to meet its short-term obligations, and the importance of maintaining a healthy balance between assets and liabilities. The income statement. The income statement is a financial statement that shows a company's revenues, expenses, and profits over a specific period of time. In this chapter, Graham and Dodd discuss how to analyze the income statement in order to understand a company's profitability and financial performance. They also discuss the concept of earnings per share, EPS, and how to use the statement of sources and applications of funds. The statement of sources and applications of funds, also known as the statement of cash flows, is a financial statement that shows how a company generates and uses cash. In this chapter, Graham and Dodd discuss how to analyze the statement of cash flows in order to understand a company's financial health and its ability to generate cash. They also discuss the importance of analyzing a company's cash flows in conjunction with its balance sheet and income statement in order to get a complete picture of its financial position. The margin of safety. The margin of safety is a concept that refers to the difference between the intrinsic value of a security and its market price. In this chapter, Graham and Dodd discuss the importance of the margin of safety in value investing and how to calculate it. They also discuss the various factors that can affect the intrinsic value of a security, including the company's financials, industry trends, and economic conditions. Earnings analysis. Earnings analysis is the process of evaluating a company's profitability and financial performance. In this chapter, Graham and Dodd discuss the various methods of earnings analysis and how to use them to make informed investment decisions. They also discuss the concept of earnings stability, which refers to the consistency of a company's earnings over time, and the importance of analyzing a company's earnings in the context of its industry and the overall economy. Dividend policy. Dividend policy refers to a company's decisions about how much of its profits to pay out to shareholders in the form of dividends. In this chapter, Graham and Dodd discuss the various factors that can influence a company's dividend policy and how to analyze a company's dividends in order to make informed investment decisions. They also discuss the concept of dividends as a source of income for the investor and the importance of considering a company's dividend history and potential for future dividends when making investment decisions. Capital structure. Capital structure refers to the mix of a company's long-term financing, including debt and equity. In this chapter, Graham and Dodd discuss the various factors that can influence a company's capital structure and how to analyze it in order to understand a company's financial risk and stability. They also discuss the concept of leverage, which refers to the use of debt to finance a company's operations, and the potential risks and benefits of leverage. Valuation is the process of estimating the intrinsic value of a security. In this chapter, Graham and Dodd discuss the various methods of valuation and how to use them to make informed investment decisions. They also discuss the concept of intrinsic value, which refers to the inherent worth of a security based on its underlying fundamentals, and the importance of considering both intrinsic value and market price when making investment decisions. Securities with special characteristics are those that have unique features or risks that set them apart from other securities. In this chapter, Graham and Dodd discuss the various types of securities with special characteristics, including preferred stock, convertible securities, and warrants. They also discuss the risks and potential benefits of these securities and how to analyze them in order to make informed investment decisions. Analysis of corporate earnings and prices. In this chapter, Graham and Dodd discuss the relationship between a company's earnings and its stock price, and the importance of analyzing both in order to make informed investment decisions. They also discuss the concept of price-to-earnings ratio, P/E ratio, and how to use it to evaluate a company's stock price. Additionally, the authors discuss the various factors that can influence a company's earnings and stock price, including economic conditions, industry trends, and company-specific factors. Market fluctuations and investment policy. Market fluctuations are a normal and expected part of the investment process. In this chapter, Graham and Dodd discuss the importance of maintaining a long-term perspective and avoiding panic in response to short-term market fluctuations. They also discuss the concept of investment policy, which refers to a plan for managing an investment portfolio, and the various factors that can influence an investor's investment policy, including risk tolerance and financial goals. We hope you enjoyed today's video on Security Analysis by Benjamin Graham and David Dodd. We hope that this summary has provided you with a better understanding of the key concepts and tools of security analysis and how to use them to make informed investment decisions. If you want to take these lessons further, please consider downloading the original book from Audible using the link below. If you want more videos like this one and other finance-based topic, please consider subscribing. Thanks again.